All right, what's going on, guys? Uh, I recorded a video after this that was kind of like a vlog. It was going to lead up into this, but after doing some of my research on this stuff, I kind of wanted to put this in first. So if you guys like this video, make sure you guys subscribe and like the video only if you like it. But and then you can watch the part after, kind of just a little bit of vlog material. And just, I was talking about some motivational stuff, but you could watch it after. So what I want to talk about is it's a pretty interesting topic is the Federal Reserve shrinking its balance sheet. That's what they announced today. And as you see here, if you take a look at the stock market, it was pretty much booming today. This last 3 days, take a look, the last 14 days, things have kind of remained stagnant. But, if today was the day to start kind of establishing a new trend higher, and again, sorry if my voice and I'm coughing like an old man and all that, but if anything, this was the day it would have been good, but it started ripping. It was up around like 200 points on the Dow, only to close down 50 points. It lost over 200 points. It was a very big, it's like some sort of single day loss record, or in the last like 14 months, I think the biggest like 1 day downturn. This was huge, and it was based on the news that the Fed is going to be unwinding their balance sheet. And now I want to talk about that to kind of explain what that means, even show you guys the balance sheet. And really, the point I will say, why I wanted to put this first, because I thought it was important, because a lot of people are saying, should I go into precious metals? Is this, what level of importance is this going to have? Is this going to make the markets crash? Yada, yada, yada. Although this is a big effect, this isn't something to ignore. However, you're not going to really see the real effect of this till down the road, because all the Fed announced was that they plan to stop, to shrink their balance sheet. And really, one part of that process means, if you guys don't understand how it works, we won't explain too much, but because it stems from how the Fed works. But what I do want to explain is the fact that the Federal Reserve, they, especially this started during quantitative easing after the financial crisis, they started putting money into the system by buying government bonds and buying even mortgage-backed securities. So those are pretty much, they were buying, when banks would give a loan out, they would buy that loan, and which would allow people to pay it home. So a lot of times, the Fed is holding, I think, like 1.2 or 1.3 trillion dollars of mortgage-backed securities. Those are people's houses. If you think about it, it's kind of weird to think about. People are paying their interest, and that interest, the profits they get on that, the Federal Reserve gets those profits, as well as now even the Treasury bonds. So when the Fed is buying these Treasury bonds, buying these government bonds, they're getting paid interest payments. They're getting paid yield. And really, as of today, or really they're going to start changing it, the policy of it is take that money and reinvest it. So that's what the Fed would do. That's why the Fed's balance sheet is constantly growing. So that's why when they say shrinking it, some people are like, oh my God, they're going to sell off. They have like $3.8 trillion of bonds, which is a fuck ton. But it doesn't mean that all of a sudden all that money is just going to get sold. People say that or if you look, the 10-year yield dropped and then went up. Actually, so if you actually understand how bonds work, just because the yield goes down, that actually means the demand for the yield has gone up. But the whole process here with them saying they're shrinking the balance sheet, it's not going to really shrink it in the sense, this is a video I saw, and it was kind of, um, decent, I guess, to say the least. But I want to actually read this, and it even comes after some news. One of the Fed president, the Richmond Fed, one of the Richmond Fed presidents, Lacker, he resigned after pretty much announcing that, admitting that he leaked confidential information, which is very crazy, especially during this time, because that 2012 period, a lot of people made money. Like David Tepper, he knew about coin. And it's funny because it relates directly to this Fed stuff, because when people knew the Fed was going to do more quantitative easing, when they knew the Fed was, because the Fed was buying not only bonds, they are buying some stocks, but it's more primarily bonds and mortgage-backed securities. If you know that the Fed is about to come in with anybody is about to fucking come in with a $3 trillion purchase, you have a an incentive if you know when that's happening. So it's so weird that these pieces of information came one after another, but it had something very, I'm going to keep my eye on that and look at it. But here's pretty much the CNBC article to explain it. It said Fed said that they're shedding the 4.5 trillion in bonds central bank is holding on its balance sheet will begin this year. So again, the Fed said they're just going to start shedding, as opposed to that could mean two things. This is what I'm looking for, and I'll read you guys this little news article, but explaining what I'm looking for, to see the effects of the Fed unwinding in this balance sheet. And this is one of those global macroeconomic things you want to be on the lookout for. But I want to look at the rate to which they start, whether or not they're going to sell these, or whether or not they're simply just going to unwind, not reinvest the profits. Like I said, they're reinvesting profits from current investments. If they don't reinvest profits, that has something. But then again, I want to see if they're going to sell the bonds, or when they say shrinking their balance sheet, that could mean so many things. But the thing is, with a balance sheet, that's assets and liabilities. If you want to shrink your balance sheet, it doesn't necessarily mean sell your assets. You could go and reduce liabilities. So ironically enough, if you think about it, one of the liabilities, which I'll show you on the Fed balance sheet, I'll pull it up, is cash. When the Federal Reserve notes, dollars. So anytime the Fed is printing out money and putting it out there, believe it or not, those are liabilities for them. So part and part, it could be where they could just simply not reinvest profits from the bonds and start reducing the money supply, take cash. Now, again, do I know the likelihood of this? Am I leaning towards one or the other? I don't know yet, and that's what I want to see. But it's to say, don't really panic too much and say, oh my gosh, they're going to sell everything. Oh, gold and silver is going to rip now because of it. Will gold and silver have an effect? I think short term, because a lot of traders will probably misinterpret this like that and think gold is now going to be the safe haven because they, again, you can't really expect the central bank to dump $4.5 trillion of bonds. And, it's just not logical. It's just not smart. So, is that to say, we could come up with conspiracies how that may operate. But the fact of the matter, they could achieve this goal of shrinking the balance sheet without ever really selling the bonds, or a lot of them. And it's kind of ironic. I'll show you the sheet. They're actually adding to their mortgage-backed securities, which I thought was very interesting. But anyways, it says the revelation came Wednesday from a summary of the Federal Open Market Committee meeting held in March, during which the group approved a quarter-point hike in its benchmark interest rate target. And that's another reason why, the markets could have went up, because, again, not only did they say this, they also said kind of in their targets, they've raised where they see the rates going up, or where the rates should be at. Signaling again and maybe another hike. Officials at the meeting noted that the Fed likely is on a faster pace with rate hikes ahead. Unwinding the balance sheet is significant both because of its sheer size and the impact it could have on markets, as Fed members, including Chair Janet Yellen, have indicated that the move itself would amount to a rate hike. So they're saying shrinking the balance sheet could mean a rate hike. And that's something to think about, because, we have not yet seen a rate hike. We have not yet seen them shrink the balance sheets. Imagine the first time there was a rate hike, people freak the fuck out. Nowadays, you say rate hike, the markets rip. So put that in together, put it in the sense of, again, the markets could digest it very negatively initially, but once people start to see it, it's really not that bad. However, am I saying this is something you brush off? No. Definitely monitor the situation. Again, how they go about unwinding their balance sheet will be the difference. Is the unwinding of the balance sheet mean the world's going to end? Fuck no. How they do it, will that mean somebody could profit or lose money? Yes, and that's what I want to look for. So yada yada yada. Provided that the economy continued to perform about as expected, most participants anticipated that gradual increase in the federal funds rate would continue, and judged that a change to the committee's reinvestment policy would likely be appropriate later this year. The summary minute said no timetable was mentioned, and then that's that. But this is the thing. Questions on reinvestment. Some members opined, I don't know how to say that the Fed should wait until the economy hits certain targets before moving, a road the bank has previously been down with when it set, then abandoned goals for unemployment and inflation before raising rates. Others, meanwhile, wanted less certain economic qualitative judgments before unwinding the balance sheet. So it's funny because as you see how this plays out, especially with that move the markets had, it's kind of now bringing into perspective for the markets, based on my interpretation, this is the new rate hike. If you guys go look, I said this in a Citizen webinar. As you know, I got guys like Brendan and Max. You guys remember when people would freak the fuck out when you said rate hike?
Yeah, absolutely.
Nowadays that doesn't happen. So, people don't really care about it. Again, we've had 2 or 3 rate hikes in the last 12 months and nobody's, markets have ripped. Now they're saying the same exact thing about unwinding the balance sheet. So now it's not, do we raise rates? It's now, what do we do with all this money we poured in the system? Do we start pulling it back? And now some people are saying we wait for unemployment, we wait for inflation, all that. And then some are saying, well, no, we just move. So the Fed amassed most of its bonds it owns during 3 rounds of quantitative easing. That's that QE, a monthly bond buying program aimed at juicing the economy following the financial crisis. The securities are mostly treasuries and mortgage-backed securities. It has been reinvesting the proceeds from those bonds and rolling them over rather than to shrink the balance sheet. So that's the thing. It's saying when it's getting proceeds from these investments that they've made through quantitative easing, even dividends on stocks they're holding, you guys got to realize, I think they may have just reinstituted a dividend, or I think Steve Mnuchin's trying to, but the Federal Reserve and, the U.S. government own part of Fannie Mae and Freddie Mac. Those are big mortgage. That's where they do the mortgage-backed securities. If there's ever dividends, what they do now is they just go buy bonds with it or go buy more of whatever they're holding. That's the reinvestment strategy. So that is the key here, is what are they going to go really take this money that they're making and keep buying assets or not? And that has a big difference, because if you think about it, that means they're constantly buying into our system. So there also appear to be some dispute about how the Fed should reinvest the proceeds, whether it should stop the reinvestments all at once or gradually phase them out. And again, these are one of the things you want to look for with what they decide on. The minutes said the Fed will continue its deliberations on reinvestment policy during upcoming meetings and will release additional information as it becomes available. So again, not the snorting, but this is something you want to look for. Simple as that. They're literally saying that they are going to be deliberating this and talking about it, and this is the information I'm going to be looking for at the next Fed meetings. Several Fed officials said in recent public speeches that balance sheet reduction probably would occur this year. The minutes help confirm that sentiment. The minutes also stated that the Fed will do its best to communicate its intentions clearly. Central bank has come under fire for post-crisis world. In the post-crisis world, sometimes for sending mixed messages. So again, yeah, they're just being little girls in that. But let me show you guys. Here it is. So this is federalreserve.gov. But here's their balance sheet. I think this is the quarterly. So this is the quarterly. We're only going to get quarter by quarter of what they're holding, but here it is. Securities held out, now, most balance sheets are in millions. This is in billions. So 4,469 billion of assets. That's 4.4 trillion. And here you go. U.S. Treasuries, they're holding 2.4, and so a lot of people are saying 3.5. You got to see how they're factoring in. Now take a look. These are from February. This is comparing the same quarter, year over year. These two, and then it's also showing you from their last October, November, December, January, February. So this is from the 3 months prior to it, essentially. So this is year over year comparison, and then this is how it's changed in the last 3 months. So one thing you got to notice is that in the last, from October till now, they added $33 billion of assets, and that could be reinvestments of some sort or whatever. But as we see here, the big thing that I notice, and this is kind of something I'm looking for because it's year over year, it's increased, and in the last 3 months, mortgage-backed securities, they're buying a lot, but they're holding 1.7 trillion. So these are their assets, right? So 4.469 trillion, and then of assets, 4.428 of liabilities. So if you don't know how to read a balance sheet, let me know. We could go over some lessons on these, only, so much in depth. That's a lot of what we go over with, students and all that. But it's pretty simple to get your hand on. But take a look at their liabilities. These are liabilities, stuff that they owe. Federal Reserve notes in circulation. So that's dollar bills, and isn't it funny? Last 3 months, they've added 35 billion. Last year, they've added 81 billion. And then reserve repurchase agreements, that's stuff that they've pretty much, they've committed that money to stuff, and it falls under many categories with them. But essentially what I'm really concerned with, or the easiest part to see why that them shrinking the balance sheet, pretty much they're going to do it through depository in institutions, and that's why we have higher interest rates. But mainly they're going to shrink it through Federal Reserve notes. It's not always going to be about shrinking down the assets and selling off these assets, because again, if they sold off $1 trillion of treasury notes and put out another $1 trillion of currency, of dollar bills, then your balance sheet would be exactly the same. And even then, isn't it funny? They could sell off all those bonds, dump fucking that money. That's what it would take for dollar to go up, or for dollar to weaken. But in this case, they could simply reduce dollars in circulation amongst many other things, stop reinvesting these profits, and you could see the market actually do well off of it. But that's just a quick little insight, and I encourage you guys want to see this. I could put this link in the description, but just scan through this, and it's kind of cool to see the history of how they've done quantitative easing, how they, at one point, you guys got to realize from 2010, the Fed was only holding $2 trillion, just under $2 trillion of assets, to now they're holding almost, it's about 4.2 as we saw. They've almost doubled it. And the thing that I've noticed here is that the thing that's creeping up the most is mortgage-backed securities, which I'm kind of looking into on my own to see how that relates to the real estate market. And again, it's weird, though, you are seeing, as far as liabilities, they've been shrinking the balance sheet simply not by decreasing currency. And that's the thing. They do not seem like they want to stop that, but it's more or less the deposits of depository institutions. So if you guys want more videos on this stuff, let me know and I will go over it. I encourage you to read this, and that's just some insight to the fundamentals, or global macroeconomic stuff. So hopefully that made sense. Hopefully you guys don't panic and understand that, this one thing, this one word or phrase spoken by the Federal Reserve isn't going to make the world fucking end, or the economies collapse. Will it have an effect, and will people react? Of course. The idea here is being able to understand, interpret, and be prepared so that you can react and find ways to profit, but mainly to protect yourself. If you guys, anybody knows my investment strategy, I'm all about protecting myself. I don't give a fuck about making profit. It's about protecting yourself. In doing that in and of itself, you get that. So let me know if you guys got questions, put them below. And even then now, go watch. This was supposed to be the intro. So keep watching. There's that. It's less informational as far as the Federal Reserve goes, but I was just walking around the house going somewhere. My brother made about, I think, 88 grand just today alone. So he beat me to a 100K week. I talked a little bit about that. So check it out. Stay in school. Love you.
Boom. What y'all know about the mismatch matching socks? That's what I say. They match because they're mismatched. That's a style. But man, y'all want to see this? Let me show y'all the toilet in here. Boom. Brand new toilets. We actually doing a remodel. Ooh, look at that. You ain't see no piss anywhere, son. Ooh. Okay, I'm being weird, but damn it, I might need to charge this camera. But what is going on, guys? So I thought I'd show you guys around a little bit. Here's a little bit of the TTF house. I'm actually going to remodel it. I was supposed to sell this thing. I thought we were going to flip it, but property values are going up. We got fucking, I think we have like 4 or 5 guys 3 now. We got another one coming, so 4 people. Brendan, where's the extra batteries? Up, got an extra battery right here. But yeah, man, so I got to find something bigger and better for the guys. But this house, property values are going up, so we're going to keep it. It's weird. This is like the first time I've been alone in a while. There's usually everyone's out and about. And I'm even gonna go take the Scion because, surprisingly running out of cars. Access to cars here, and I'm not really trying to take out. What's up, fam? Ooh, my man. Not really trying to take out these things. I don't know if you guys have seen these guys in a while, man. Yeah, because, I got people telling me I rent them on a daily and shit, but can't forget about these guys. That beast, son. You see the grill? Blur out a license plate if you see it, Brendan, you know what I'm saying? Ooh, I miss him. I actually have the keys in my pocket right now, but I should probably take those out soon. Honestly, it's getting hot, so now we're getting the sun up, no rain. I could do that, but, get my fake Yeezys on. I just posted a picture on Instagram. My brother just did a 100K week. That was with real estate. So pretty crazy, I feel like I got to step it up with some stock stuff because, if I beat him last year to 100K. I even did, and then in 15, I beat him. He beat me in 15 to 100K week. You know, we have little weird games like this where we see who can make 100K or six figures the fastest. 2015, I did a $250,000 in a week, so I beat him to that. But still, man, fucking blows. He got me. So I feel like I got a fire under my ass that I really need to step it up. So you guys get to witness it, man. Y'all ready? Y'all see this Scion, man? About to roll deep in this thing. Yeah, let me see. So I don't get my reflection in this. Boom, baby. Yeah, here, we'll get like a little, or that license plate, we'll get. Okay, I'm gonna get food, but I'm gonna talk about some things, you know. I'm actually gonna finish this video. What do you guys think about this? Not too bad of a car, right? You guys want to make a video in it? We could do like a review or a driving thing. It looks like it's a stick shift, but it's not. I wish it was a stick. But what I was gonna say, look at these racing seats, man. It's fucking hot. I was gonna actually make a video. I'm probably gonna end up finishing it on my computer because I will need to do it. It's gonna be about stocks. I'll let you guys know, but just wanted to start off open with that. You know, I'm really excited. Again, I think my brother just sent me. Can't believe he beat me 4 months in the year, so I'm kind of let's go, man. We got a lot of work to do. I've been on the guy's ass at the house too. We gotta make a lot more money here. Take advantage of 17. Take advantage of the opportunities there, you know. And hopefully you guys see that. You know, I doing pretty well, and at the same time, I'm fucking hungry. So both in a literal sense right now, I really want to eat, but also in the sense that, man, you know, being around people like that who are making money like that, when I see, you know, even guys like my brother, I'm very competitive. So if my brother beats me at that, you know, even pulling off 100K, you know, I really want to step it up to that level. And hopefully you guys see, man, if you guys, you know, and that's the thing, because I want to encourage you all to do, you know, if you guys just see my video, you know, it's all about all my videos. It's all about making money the right way. Who's calling me? Oh, it's a, well, I actually got an answer. So I'll continue that thought. Give me 1 second. All right, that was actually the guys for the floors. So like I said, we're gonna be remodeling the, man, this fucking fake ass stick shift ass motherfucking manual, man. This car is interesting, but I mean, oh, hopefully I don't fuck it up. It's got full tank of gas too. Nice. Who the fuck be driving this thing? This car's cool though. It's really sporty. Very good steering on it actually. But yeah, you know, I'm getting the floors done. You know, we're redoing the house. Want to make it, like I said, man, so many people are coming out to the TTF house. You know, the brothers are getting more active. We've been getting way better brothers, way better pledges, all that stuff. It's been awesome. So, you know, want to make sure there's a nice house, nice place everybody could work out at, live in, you know. And I want it to be nice so that they get motivated, you know, work harder for living in upper echelon. But anyways, you know what I was saying, you know, like, you guys see my videos. I want you guys all to make money and go about it doing it the right way. And that's the thing, you know, get fucking motivated, get hungry to make money, to do a lot, you know. But the whole idea is being able to do it realistically and to do it the right way. Like, you know, for somebody who's made as much money, and, you know, I've made $100,000 in a week, you know, I've done $250,000 in a week, you know, I've even done stuff in a monthly scale bigger than that, you know. Those are my goals. I set them high, but for you guys, you know, do it accordingly to what you guys have. But even then, don't be afraid to think big like that. But at the same time, don't be dumb about it. Don't let that make you make bad decisions, you know. Hopefully you guys see where I'm getting at with all that. But just taking it both ways. But at the same time, I want you guys to not be, you know, you can't be lackadaisical in the sense that, oh, woo, it sounds so fast, but it's so slow. But, you know, make sure you guys are in every single aspect just hungry, you know, that you want it there, in the sense that, you know, I've said it even with that video with opportunity, just don't think it's always just going to be stuck there, and that you could, oh yeah, I'll go get it later, yeah, no, like, you got to be a fucking savage and want it right now. So hopefully you guys are like that in every single aspect. Yo, fam, that helicopter is circling very low, maybe too low.
Oh, that's good. I was tripping. All right, y'all. So I'll finish the rest of this on the computer, so then I could get into the lesson, real, show you guys something, because obviously it affected the markets, and I think a lot of people don't understand what it means, and you guys could learn from it. So yeah, stay in school. Make sure you guys like, subscribe, all that. I probably should have said that in the beginning, but all right, peace out.